Videos about stocks, the stock market, financial independence, and where to invest this year. Nowadays, social media is full of advice to invest, and people selling useless courses that promise to make you money, but are more likely to cost you instead. There are plenty of videos, but what about something for people who don't even know what stocks are? To give you a better understanding of how stocks work, how the stock market operates, and the types of stock investments, we've created today's video.
A stock is a security that represents ownership in a particular company. When you buy a share, you become a co-owner of that company, even if it's only a small part.
These stocks are traded on stock exchanges, which are like marketplaces where anyone can buy or sell a stock. There are many exchanges, such as the American NYSE or NASDAQ, as well as international ones like the London LSE or the Tokyo TSE. In fact, there are many more exchanges. Stock prices are determined by supply and demand. For instance, if many people want to buy Apple shares, the price of Apple stock goes up. On the stock market, there are individual investors, like myself or people around you, as well as institutional investors, including banks, investment and pension funds, and so on. The entire stock market is monitored by government bodies and regulatory authorities that ensure fairness and transparency. But how do companies actually make their way onto the stock market?
When a company decides to go public, it issues an initial public offering, or IPO. At this point, the company begins offering its shares on the stock exchange, which allows it to raise capital for further growth. Before the IPO, a company's shares are only held by founders, private investors, or employees. Once the IPO is completed, anyone can buy shares and become a partial owner of the company.
In the past, you had to physically go to the stock exchange to buy a stock, but now everything can be done online. A broker facilitates this process. Buying stocks through a broker is straightforward. First, you choose a broker, a company that enables you to trade on the stock market. Once you open an account with a broker and deposit funds into your investment account, you're ready to start. On the broker's platform, you search for the stocks you want to buy and place an order. The broker then executes your order on the stock market, and the shares appear in your account. You can also monitor and sell your stocks through the broker, who serves as the link between you and the market. Some well-known brokers in the US include Charles Schwab, Fidelity Investments, and TD Ameritrade. In Europe, popular brokers include DeGiro, eToro, and Interactive Brokers. It's important for everyone to conduct their own research to find brokers available in their country, evaluating their advantages, disadvantages, fees, and available trading options.
Companies are divided into various sectors based on their focus areas. Let's look at the most significant sectors and which well-known companies represent them. The first sector is the technology sector, which includes companies focused on the development of software, hardware, electronics, and the provision of technological services. Some of the most well-known representatives are Apple, Microsoft, Google, and NVIDIA. This sector is typically growth-oriented, with high revenue potential but also higher volatility and sensitivity to economic changes and innovations. The next sector is the financial sector, which includes banks, insurance companies, investment firms, and other financial service providers. Notable companies in this sector include JP Morgan, Bank of America, and Berkshire Hathaway. The financial sector is often influenced by interest rates and the economic cycle. Typically, it thrives during economic growth, while it may face challenges during recessions. We must not forget the healthcare sector. This includes pharmaceutical companies, manufacturers of medical devices, and healthcare providers. You certainly know companies from this sector such as Pfizer, Johnson & Johnson, or Moderna. The sector is relatively stable and less sensitive to economic cycles because the demand for healthcare remains constant. However, it is significantly affected by changes in regulations and the approval of new drugs.
Next is the consumer staples sector. It includes companies that produce essential products, such as food, beverages, and household necessities, like Coca-Cola or Walmart. This is a defensive sector with low volatility, which tends to remain stable even during economic downturns, as the demand for essential products remains relatively constant. The discretionary consumer sector is the next one. It includes companies that produce consumer goods and services that are not essential, e.g., entertainment, retail, automobiles. Examples of companies include Nike, McDonald's, and Amazon. This sector is sensitive to changes in the economic cycle and often grows during economic expansions when people spend more on non-essential goods and services. Next is the industrial sector. This includes companies operating in manufacturing, construction, transportation, and defense. Companies in this sector include Caterpillar, Boeing, and General Electric. The industrial sector depends on the economic cycle and market demand for investment goods, making it sensitive to economic recessions.
Following is the energy sector. This sector includes companies involved in the production, distribution, and processing of oil, natural gas, and electricity. Representatives include ExxonMobil, Chevron, and Shell. The energy sector heavily depends on commodity prices, e.g., oil and gas, global demand, and environmental regulations. Next is the real estate sector. It includes companies involved in real estate, such as real estate investment trusts, REITs, and developers. Well-known companies include Realty Income, Simon Property Group, and American Tower. This sector often offers high dividends and stable returns, but is sensitive to interest rates, as rising rates increase financing costs and affect demand for real estate. The last one is the communication sector. This sector includes companies providing communication and media services, including internet, television, and entertainment. Examples of companies are Walt Disney and Netflix. The communication sector is a growing sector that benefits from increasing demand for digital services and entertainment, but is sensitive to technological changes and competition.
You have to keep in mind that investing in stocks can bring returns, but it also carries various risks. However, each risk can be mitigated to some extent with the right strategy and a thorough approach. We'll discuss the risks further in the next video.
In upcoming videos, we'll dive deeper into topics like what ETFs and dividends are, financial cycles, investment strategies, how to choose a broker, the psychology of investing, and how to select a company to invest in, and much more. If you haven't seen our previous videos, be sure to check them out. And if you're a beginner, take a look at our beginner playlist, which includes this video. Give us a follow here and on Instagram so you don't miss anything, and we'll see you in the next video.
See you in the next video.